Hi there, it's 24th of October 2018, but it's been a rough day in the markets again. You know, we're in this whipsaw, up and down, very volatile at the moment. But I think it's a correction, you know. It's happening in America, of course. That's where we're taking our lead from. Lots of things going on. You've got the Saudis killing that guy, Khashoggi, whatever his name is. I've heard so many pronunciations of that. Apparently they didn't kill him, then they did, and it was a fist fight. And then there was a sort of a rogue element. They killed him, let's be honest. Anyway, it's that going on. There's the threat of interest rates going up all around the world, especially in America. There's also, Trump blaming the Fed for doing their job, pretty much. There's, There's Brexit. There's trade tariffs. There's Italian debt. And this is all in the play, you know. And sooner or later, we knew this was coming. A lot of this was coming. The markets have a bit of a lag sometimes, but then one thing sets off another thing and markets start falling, and all of a sudden everyone starts reporting on bad news, which begets bad news. But I just see this as a correction, you know. It's the definition is apparently 10% is correction from 52-week highs, 20% or more is a bear market. I don't think we're heading into a bear market yet. Why do I think that? I just don't. I don't think we start off in a bear market like this. It comes down. Bear market rallies are quite sort of strong as well. So I think we'll rally towards year end. Once this is out, it may take a couple more days, maybe a week or so, but we'll be out soon. I think we'll have a tremendous rally towards the end of the year. But it is quite scary. And I know if you're a new investor, it's quite easy to sell at these levels and think, oh, I'm losing money. Look at your portfolio value. It's going down, and you start selling. No. That's not real. That number there you see in that portfolio value, it's not real. It's just paper money. If you sell, it becomes real. You know. So what you're seeing is a fluctuation. Just don't go selling because you're worried about that. Look at the companies you're in. Sometimes I find it quite exciting. When I realise it's not really real, we're only here temporarily. We'll all be dead soon. That's the positive way to look at it. You know, something is not that real, you know, and I find it quite exciting. That's why I quite like the stock market, you know. And if you can get your head into that counterintuitive thought that the time to buy is when others are fearful, like Warren Buffett said, it's quite exciting, I think. I do find it quite exciting. I started off in about 40% cash about a month back. So I didn't know when this sort of correction was going to happen, but I knew one was going to happen. And now I'm down to 4-5%. So I've been buying a lot of stock, you know, because I just think it'll do well by the end of the year. I think I'll be on a portfolio high. One of the companies I hold, Totally, TLY. I don't know if you know about Totally. I've done a video on them. I'll put them at the end of this video if I remember. If I don't, just search my channel for them. But they're an NHS outsourcer. They help anything NHS outsources. They help, and this helps NHS because it's more efficient. It saves them money. It's more appropriate as well. I think the NHS did a study in 2017 saying, I think it was 1.5 million people a year are treated in A&E. They don't need to be treated in A&E. That's very expensive. And they can be dealt with in the community or in local by local doctors and stuff like that. So this is what they do. And they came up with a trading statement today. In fact, I'm going to show you it now. If I just scroll this down, I need to keep this float on top. I need to keep that there. Let me just look at my portfolio today. Dreadful. Look at it. Upland, what's happened to them? They're going nuts. 11% down. Live company group. I do like Live. I do question at the moment their value. They are at 40 million market cap. Their revenues are now, but they're expanding so fast. And let me just say, they're in 51, countries already. They've been going 6 months pretty much, or they've been listed 6 months. Or I say 6 months. They've been listed in December last year, which is more than 6 months, of course, 10 months. But they've already turned a profit, small profit, and they're in 51 countries. They're in 26 cities in China. They've also just hooked up with the Dallas Cowboys, which is one of the biggest sports franchises business in the world. The owner is worth $7 billion, and also Live Nation, biggest live events company in the world. These kind of companies do not hook up with anyone. You know, you've got to have a special kind of something to be involved with these companies. That's in America, of course. So the two biggest markets in the world, China and America, they're there. And they're with big companies in those. So it's very exciting. They're growing very quickly. And sometimes when that happens, a company's valuation can spike, but the share prices come back. And I quite like the share price. Let me just show you the share price here, sorry. Try and get the share price up. And it's come back. This is what I think is going to happen here. Let me just get trading view up here. I do like trading views. Very nice. So there we are. It's there actually. This is where I sit. Look, it's been up here. I started buying around here. I do think it could come back to around about these levels. See this level here, support, resistance, maybe 55, maybe even 50 in this kind of market. But you know what? I'm prepared for that. When you're buying in this market, you've got to be prepared for pullbacks to happen, and you've got to scale in. Like I said, look at my videos on how to get the best price. I welcome pretty much the share price to come back when I buy a new company. I expect it because I don't go full in. And in fact, if a company starts to rise on my first buy, I'm not worried, but I'm not happy because I'm not at my full exposure. And I expect the share price to come back to scale in a bit further. So if the story hasn't changed. So at the moment, like I said in my first video, what I normally do is I look at my portfolio worth and I'll lob off 10% first of all. So let's say for round figures, 100 grand you've got worth, okay? I'll take off 10 grand, all right? Because I'll just say that's fluctuation that can go up and down. That paper loss can go up and down. So I've got 90 grand. Now the maximum I want to put into any one investment is 10% of that, so it's 9 grand. Right? They're split into three, it's 3 grand each. I'll buy my first tranche, 3 grand, and if it comes down to 10%, buy another tranche, 6 grand, another tranche, that's another 3 grand, so it's 9 grand in total, 10% exposure, that one stock. At the moment, I maybe even match that down a bit. I'm literally not going above 5% because at the moment it gives you a lot of sort of arsenal, of firepower, because it's very volatile, and share prices can come back further than you think. But I do quite like it when the share price comes back. When I sort of buy in my first initial amount, I do sort of expect it to come back, and I'm a little bit annoyed if it doesn't, so I can't get a decent exposure to it. So anyway, so that's LVCG there. Let's move this across. Let's look at Totally. So this is my portfolio today. Down, 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 down. God, Armadale Capital was down as well, was it? Okay. So I had 4 stocks rising. The biggest rise I had, look at this. It's BT. It's a FTSE 100 company. It's above 250 in the chart. I quite like that. It hasn't been there since February 2018. So let's look at this BT group. Look at this. Get my face out of the way. I'm in the way. Get in the corner. Hello, I'm in the corner. Hello. So look at this, 250. It hasn't been there since February. Last time it was there was February the 2nd, and that was in a downtrend. Now it's an uptrend. As you look at this, look at the 50-day moving average and the 200-day moving average. When that crosses that, that's what's known as a golden cross. That's a very bullish sign. Very close to it. Quite like that. Okay, let's go to Totally. They had news out. So last night they had news out. Holdings in company. This is about sellers, essentially. I know there's sellers in there. I've written the blog, and I said there's a good chance to take advantage. They've had big sellers in there for a long time, institutional investors. And institutional investors mainly sell, invariably, not because of the performance of the company they're invested in. Nothing to do with that. A lot of them is internal policy. For example, they won't invest in companies below 20 million, change of management, change of focus of investment strategy. That's mainly what happens, and that's been happening here. So Legal & General, and I thought Legal & General were out, but there was different arms of Legal & General. There's the unit trust, there's the assurance company, but, so this is a TR1, this is what's called. When a company has significant holding, 3% or more in a company, they have to notify the company with one of these TR1s whenever they make a change in their position in the company. So if it's 3%, it goes up to every 1% increment they have to notify the company. If it's below 3%, they don't have to. So they've notified the company today that they are below 5%. So it was 6.8. This is the box. You should look at the box 7. So you'll see here across this. This is the resulting situation after the threshold was crossed. So after this report, so they're down below 5%. That's total amount of shares in issue by the company, and they're below 5% of that. But I looked down this and said, I didn't even know they're in. So if you look at it, it gets a bit complicated. So Legal & General Group, total voting rights, 7.64%. So that's that group. So, sorry, investment management has 7.64%. Legal General Group Direct is below 3%, or insurance below 3%. So that makes them around about below 5% in total. So they're almost out. They're almost, it's got a few more shares to hold. But this is what happens. They released, that was last, or night before last. They released that. They released a trading statement today. Very bullish, I thought. So here we go. I'll point out all the bits I like here. The board is pleased to confirm that as of the 30th of September, Totally was trading in line, which is fine. And cash generation continued to be strong with 9 million of cash in the bank. So that was at the 30th of September. All right, they did have 10.2 million at the end of March. So what are they doing there? Are they paying down? I know they had trade payables. They've also having to sort out Vocare, which is transformational for them, big company acquisition. But it did have inefficiencies and operationally it wasn't up to scratch kind of thing. So they've had to adjust that, and they obviously got to pay for that. But it's improving efficiencies. So that's one thing I quite like, positive. So Totally continues to make progress since releasing its final results in July. The company has announced in excess of 10 million in value and new and resecured contracts through subsidiaries. So the pipelines of opportunities continues to grow, and the board remains confident in Totally's ability to secure business and ensure that all opportunities are maximised. So again, another positive. Very good. So again, significant changes have been made internally to process and procedures. There we are, efficiencies, the successes of which have been demonstrated by continued improvement in ratings following Care Quality Commission inspections. So they've had the thumbs up of approval. The changes they've made have improved quality of service. So it's very good. Extensive changes have been made to continue to make delivery back office functions across all subsidiaries. These have not only improved quality but also reduced costs. Costs reduce, contract value going up. Costs reduce, efficiencies, operationally going better. Every paragraph is good here. Whilst there is more work to be done across the group, this is happening at a pace, and the directors believe Totally remains well placed, man, to take significant market share of the outsourced integrated urgent care. And then at the end here, pursuant to Rule 11, AIM Rule 11, they've contacted institutional investors, including Lombard Odier, Waite Asset Management, Schroeder Investment Management, and Canaccord Genuity, who no longer, I'm going to sneeze, have a notifiable interest. So they have 3% or less. So they're becoming less significant. But there is sellers in here. So today this came out, first thing up, boom, it's up 3%. I thought, oh, this is going to climb now. It's going to climb. And I'll show you what happened. This is what happens when you have sellers in the market. So, 24th of October. Look, it started rising. Within the first couple of seconds, 250,000 shares sold at 18 pence. That's 45 grand. 45 grand coming straight on the market like that. And I suspect this is one of the sellers as well. And then you had another one, probably here. That's 4.5 grand. So it's going along nicely. It went down to minus 3% now, okay? Because of that big seller took out the market. And then it's starting to pick back up. And like you said, lots of buys come in, lots of buys come in, lots of buys. And then again, at 20 to 12, another 45 grand came in. And this, look, another, 5, 6, 7 grand. So you had about 100 grand's worth of sales today. Now, look, average volume is less than 500,000 shares. That seller today beat that volume on its own. That's why the share price was battened down. Now, when these sellers go, this share price will move. And I'm looking forward to seeing their final results. It's do your own research, of course. I mean, but this has been hammered totally. I'll show you the share price totally. It's crazy. Totally crazy. But operationally, getting better. They're getting more efficient. Look at the share price here. Look at this. Look at this. We've come down from... Where are we? Move my fat head, bald head out the way. 80 pence. Now down at 18.2. Big sells. Look at this, big sells. Look at that red, look at the red there. Big sells. So it's nice to know that some of these sells are almost out, and I think hopefully it will be. So. And talking about selling, always look at selling, always be aware of selling. I wrote my blog on Jangada Mines today. In fact, One of the companies I think was actually up today, which was Jangada, which is nice to see because they've got some sellers in there from the placing. I'll explain this again. Heidi, this is for you. Why, when there's a placing happening and warrants and all that, why does the share price go down? Okay, this is what happens. So, if a company raises funds, okay, they raise them with private investors, most small companies, because institutional investors don't bother with small companies. And so some, maybe, most, maybe, will just flip the stock straight away because it's issued at a discount to these places, the people investing at the placing level. And so they can flip that stock straight away for 10, 15, 20%, depends how much the discount is compared to the market, you know, that differential. And they're more likely to do this if they have a warrant attached. So the last fundraise at Jangada had warrants attached. So they issued one share, one warrant. Okay, the share was at 3 pence. That was the issue share. The warrants were at 6 pence. What does that mean? Okay, so let's say you got the share, you bought the share, you buy the share at 3 pence. You don't pay for the warrant at 6 pence. Okay, so straight away you sell the share because they say, you know, when it comes to the market, say the price was 3.5, so you can get a bit of profit there. But you obviously still have the warrant attached at 6 pence. There's no risk to hold the warrant. You don't have to buy the warrant. You don't have to outlay any money until the share price is above 6 pence and you know you're going to make a profit. That's when you outlay and buy your warrants. Take up your option to acquire those warrants. And straight away you're in the money, straight away you can sell and make a profit. There's little risk or no risk to you until you buy that, and then you only buy them when you're in the money. So that's why people hold warrants and not shares. So at the moment, I just say, you know, this is the levels. The warrants are at 6. The placing was at 3. The IPO is 5. And so there's very little risk, in my mind, buying at this level. Because you can double even before, and pretty much close to, just above IPO price. When you double, you can be de-risking, or you can have be 80% up. Let's say you want to de-risk for 5 pence. You can be sort of 75% up and de-risk even before initial investors in the company who IPO'd this company, you know, were in at 5 pence. And definitely, if you want to hold on a bit more, you worry about the warrants coming into play, then you can hold on right now and say, you know, if it doubles and say sell before 6 pence or a bit higher than that, because they're not going to sell at 6 pence, they'll sell above 6 pence to make money. But I've been looking at the volume on Jangada. There are 38 million shares issued as part of the placing. There's now about, how many trade a day? There's now about 8 million shares left. We've gone through 30 million since the placing. And at this rate today, obviously it'll be about 8 trading days and it'll be out. So that's November. Yesterday was a couple more million than that. So, like I say, average volume is 2 million. We'll do it in a week, in 4 trading days, if you know, it equates to average volume. So that's not just the reason to buy, of course. The company has a cracking asset, I believe, in Brazil. Worth looking at. Anyway, I hope that helped. That's it. It's a tough market. Hang on in there, you know. It'll get better. This is not the time to sell, honestly, and crystallize your loss. This is the time to think, it's not real money, it's paper money, you know. Don't invest with anything you can't afford to lose. That's the thing. You'll often find people really panicking or ramping stocks in this environment because they're overexposed. You know, don't get overexposed. Simple as that. My lesson 1 that I've learned in small cap stocks, you know, risk. Don't overexpose yourself at all. That's a very important lesson. By all means, please sign up to Vox. It's free. You get RNSs. Some news straight to the front screen of your smartphone whenever a company releases them within seconds. Just go to voxmarkets.co.uk/app for that and sign up here on the website. It's free of charge. And it's a cracking, you know, very user-friendly and all the stuff you need, really. By all means, if you enjoyed this video, subscribe below. If you didn't, don't tell anyone, of course. But it would help if you subscribe, because then that way, every time I release a video, you get it. I'm getting bigger! So you get it at the front screen of your phone. Your phone, your thing. In fact, if you press the little bell button, wherever that is here, so you will get it also to the front screen of your phone by notification. So please do that. And like, share. Any questions I'll try and answer. I do try and catch up every couple of days and answer any questions you have. I'll be pleased to try and answer if I can. You know, I'm no guru. I've been investing for 20 years. I've always dabbled in small cap stocks, but I've, in the last 3 years specifically, just focused on small caps, But so I'll try and help if I can. Thanks for that. Don't worry, the markets will get better. It's hard, but they will get better. The Santa rally's around the corner. Listen, Santa rally is the last week in December, all right? Don't hold out for that, but I think we'll have a rally after midterms and Brexit deal's done. There will be a deal. Have hope. It's the only thing we have.